So when the Tax Cuts and Jobs Act passed, there was this 20% pass through deduction. You explained the S corp, and
Right.
how the revenue flows through to your individual tax return, and you pay at your individual tax rates. So you had a 20% tax deduction that you could shield 20% of that revenue from taxes, and
Yes.
then you had the immediate expensing provision. What were you able to accomplish over these last 8 years since the passage of that bill with that kind of policy?
With us being a chemical manufacturing company, we do everything from the research and development, develop new formulations to the mixing and the packaging. And we give our customers a finished product, ready to go on the shelf of a Walmart or a Home Depot, Michael Craft stores. And our products go all the way to Russia. So we have a global reach, but we have a lot of equipment that we need to in order to produce our products. So prior to the Tax Cuts and Jobs Act, whenever we would buy a piece of equipment, we could only deduct a portion of that over a period of years. So a portion of it every year for a period of years. Straight line deduction, if we had a piece of equipment that cost $100,000, we could deduct $10,000 of it per year. And,
Okay.
and the yeah, and the logic behind it is you don't that equipment lasts for many years. You don't use it all up in the first year.
Right.
So what the Trump Tax Cuts and Jobs Act did was it allowed companies like myself to deduct off of our taxes, off of our earnings, the entire cost of that equipment in the year that we bought it. So in year one, if we bought a piece of equipment worth $100,000, we deducted $100,000, and that makes projects that we take on more affordable. If we can lower our taxes, it makes the projects more affordable, more attractive for us to expand our business.